How's it going out there? It's August 11th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. So I was supposed to go to the Dominican Republic last week. It's not a timeshare, like an ownership thing, but it's kind of like on a weekly basis, similar to a timeshare. We actually own it. And it's at the Hard Rock in Punta Cana. And it's all inclusive, which is good. So everything's paid for up front, which is awesome if you have kids, because they're always hungry all the time. There's restaurants, a bunch of pools, everything's, most of the stuff you pay an upfront fee, which is really cool. And we've been going to the DR for about, say, 6 years now. And everything was booked. We were ready to go, including the flights, which cost me $5,300. And I booked them 2 months ago. $5,300 for 4 people, right? 2 of those are kids, right? My 2 daughters. It was the cheapest I can get. My wife and 2 daughters. And that was leaving from Jacksonville and flying to Charlotte, north, and then back down south to Dominican. That was the cheapest flight. I mean, there was a couple of cheaper ones, but there was 8 to 12-hour layovers, which is insane. Or I could drive and save maybe $1,500 and drive 7.5 hours to Miami, but you'd have to pay for the hotel. And then when we get back from vacation a week later, you have to drive from Miami all the way back, which is pretty insane. As you have kids, you'd spend the money and be like, okay, I don't want to do all craziness. But that's how much it costs, really expensive. Now, I haven't flown internationally since COVID, anywhere outside the U.S. So talking, about 2 years? I did travel around the U.S. We travel a lot more now. And when I looked at my passports, mine as well as my kids, my wife's okay, were expired. And I had no idea. And this is about 10 days before we're going to leave. And I probably could have got my passport renewed over that time frame. There's different services you could use. But my kids, they need, I think they're under 16, I think. I don't know. I just read, I forgot what it was. But they have to get brand new passports. So it's not renewing them, which is a much easier process. You don't have to go through all these checks and craziness. They need brand new passports. And that would have took a little bit longer. I'm not sure if we could have made it. So the good news is I was able to cancel everything. The Hard Rock refunded me fully, which was awesome. Delta decided that's what I was flying on. They gave me credits, which I was perfectly fine with, canceling 10 days before. But now my family was disappointed. They're like, come on, Dad, wanted to go away. We were excited, all this. So, as the perfect dad, I tried to make it up to them. And I said, all right, let's go to Disney. And they've gone to Disney before, so they weren't going to be too excited. But I wanted to do something different, do like exclusive tours and everything. Again, I'm saving like $5,500 just on the freaking flights. I cannot believe that's what it costs. I had no choice. And that's 2 months ago we booked it. So decided to go to Disney, which, by the way, for some reason, probably 3 or 4 people that I know that just had kids haven't been to Disney, but I've just been talking to them about it. I'm like, yeah, I can't wait to go to Disney and take my kids because they were really, really young, and now whatever, some of them like 3, 4, 5 years old to 6, 7 years old, and they're gonna go to Disney, and they're like, how is it? I heard it's great. I'm gonna be honest with you, and this is just a quick heads up. I've said this a couple of years ago when I went there, because you don't see this on a brochure. When you're booking it, you see all these families and happiness in it. I mean, by the end of each day, you're going to be miserable. I mean, it's not really vacation. It's insane. And you're waiting to get out of the park, especially if you go to Disney, right? Because you got to go to Disney World. Well, when you go to Disney, you park your car, and then you have to take a tram over. Or if you stay in their properties, which is going to cost you an extra $1,000 to $2,000 more, you could take the ferry. And then you get into the park, you wait online, and you go in, and it's great. As soon as you get in, Mickey Mouse, oh my God, the kids are great, taking pictures. It's great till about noon. After that, it's a nightmare. It's crazy. It really is. I'm being honest with you. It's not that I don't enjoy the kids. It's not that you enjoy Disney. But especially we have really young kids, they're walking all day. They're walking probably over 5 miles easily a day. So they're exhausted. And maybe you push around a stroller or whatever if they're really young. They're hungry every 45 minutes. So they're like, can I have a hot dog? Can I have a soda? Sure, here's a hot dog. Here's a soda for 2 kids. Okay, that's $22, $23. Then like 10 minutes later, Dad, I'm hot. Can I get a water? Sure, water. It's like $4.50 for just a small bottle of water. Like, can I have that cool toy ball that lightens up every time it hits the ground? Could we get that? Because they have all lighting toys that gets later and stuff. And you're like, sure, it's Disney. Let's go. That's like $25 when it's probably like $2 on Amazon. Or when they're waiting online. All lines are very, very long. Most of them are longer than 45 minutes. And you're going on these lines in 30 minutes. Oh, I got to go to the bathroom. I mean, I'm being honest with you. It's cool. The pictures are cool, but it's not a vacation. And you and your wife aren't going to enjoy it. It's not like, oh, we could have, you don't have sex or anything. And it's not because of your wife or you. You just, both of you guys are exhausted. You think it's going to be fun. And it's just go there knowing this, because it's going to be so much more fun for you. Because if you go there just by booking it, looking at the brochure, and a lot of people won't tell you that. It's like when they buy a really, really expensive car, it turns out to be a piece of shit. They're like, oh, it's great, it's awesome. They never want to tell you it's bad because they paid a lot of money for it. But this is something that you're going to pay a lot of money for, especially now. But man, it's crazy. It really is when you have young kids. I'll be honest. I'll be perfectly honest with you. Again, people might say, it's crazy. Listen, it's very, very, very expensive. It's tiring. It's a grind. And when you leave Disney, and this is, just the regular Disney park. Not talking about Epcot Center, Hollywood Studios, or anything else. Animal Kingdom. When you get out of there, you're not getting to your hotel for 2 hours. I mean, maybe an hour if you're staying on properties, but there's still a long line, and everyone's leaving at the same time. I don't know what capacity is, 20, 30, 40, 50,000 people, whatever it is. Everyone's kind of leaving between like 7 o'clock and 9:30 or whatever. Maybe they'll watch the fireworks. And they're all leaving, and there's a massive line for this tram. And the kid's like, oh, I can't walk. Could you hold me? You see so many parents arguing and yelling at their kids and people fighting. It's so great. I've never seen so many parents so angry in one spot before in my life. But then you take the tram to your car. Not to your car. You take the tram to like an area where you then have to take a bus to your car, and then you have to walk to your car, and then you got to drive another 30 minutes, 20 minutes, 10 minutes, depending on how far away you're staying. Look, it's great for the kids, but it's a little nuts. The good news for us is we didn't go to Disney. We actually went to Universal Studios, which, is an option, right? You have Universal, Disney, and all the park packages and stuff. So we visited both parks, and then we went to Volcano Day the next day. Thank God, because when we booked this, and it's like a week ago, Disney recently announced at all its properties that you have to wear masks again. They mandated it. There's parks, hotels, all properties, and that resulted, you can see the crowds at Universal and those probably, that resulted in a lot of people switching their plans from Disney and those Disney parks to Universal. And it makes sense for several reasons. One, it was 90 degrees. Wearing a mask, 90 degrees, we did that already. We did that about a year ago when we went to Disney. And we said, okay, let's just go, we'll hang out. There's not going to be a lot of people there. And it turns out there wasn't a lot of people there, but they closed everything except for the rides. So every ride had 45-minute lines on it. Didn't matter. You could do the virtual thing or whatever, but it was still a long time because there was no shows, there was no food stands, there was no nothing. So the only thing you could do is go there and go on the rides. And every other ride, they're wiping it down, so it wasn't like it was, operating at full capacity. Anyway, we were wearing masks then, and even my kids said that, we don't want to go. We don't want to go back. We want to go next day because they just couldn't wear the mask in that kind of heat. It's very difficult. So Disney mandating that hurt them a lot. Plus, you're not seeing that business internationally. Someone's been going there for a very, very long time. I could tell you, the international crowd is very, very large at these Disney parks. And right now, they're not really going there. You could see it. You're not seeing a lot of people speaking different languages or anything because the restrictions of flying back into your country. I mean, you have to take a COVID test before. So if they come to the U.S., now you have to take a COVID test like 3-4 days before to get back into your country. If you have COVID, you have to stay here another 2 weeks. You know how expensive that is? You know how hard it is to make plans like for an extra 2 weeks? And that's a pretty big risk to take. And a lot of these people put you on quarantine even when you get back in there if you're coming from the U.S. for 2 weeks. But it's resulting in that international crowd not coming to those Disney parks right now. So if you look at the crowds, I'd say it's mostly Floridians. I'd say about 40 to 50%. And the rest is from other states around the U.S. And Floridians, look, we're not wearing masks anymore. We're not. I mean, it's funny when I see so many media channels right now. Of course, the media channels with an agenda. I think every news organization has an agenda. We all saw that, right? We all know that for a fact now. But they're trying to destroy DeSantis. I didn't even know who DeSantis was when I was here. I had no idea. But just, you see it so much now with him fighting with Biden back and forth. But even Kramer said something really stupid the other day that, he's basically, killing people, whatever he said. I kind of let him have it on Twitter. I love Kramer, but when you're saying stupid shit when you don't live here, you got to get called out a little bit, all right? And I hate when people are talking about that when they really don't know from someone that's lived here, right? You're just listening to your own organization, which is 100% biased. And again, I understand if you're on that certain channel, you have the agenda, you have to support it no matter what you think, or you're not going to be working there, right? So I get it. I understand. But still, when you're saying that publicly, and you don't live here and don't know what's going on. And for me, living here for 10 years now, and DeSantis has done, he saved our economy. And it wasn't like this reckless decision. He's looking at the facts. He's looking at the numbers like everybody else, like the statistics I showed you. And I tell you all the time. But last year, we opened up early, and then we had a spike in cases again. And he cut back. He was open like 75%. They cut back to 50 to 40%. He wasn't like, oh, F it, let's just keep it. No, he was just looking at the facts. Yeah, everybody thinks he's this reckless guy, especially if you don't live in Florida, based on everything that they're saying to him through the news and whatever. But more to the point, what is DeSantis doing? We, the people, us, you, me, we vote for our politicians. Why do we vote for a specific politician? Because they support the same ideas that we have. Not every single idea, but most of them. We like them and say, hey, this is how I live my life, and this guy's going to run it based on whatever, the tax structure, if you're into climate change, both on Democrats, Republicans. That's who you vote for. And that person is supposed to speak for their constituents, right? And that's their job. So DeSantis is listening to everyone in Florida. We don't want to wear masks. Kids should not be mandated to be vaccinated. I mean, give me a break. Are you kidding me? You look at statistics with the CDC. Holy cow. The director of the CDC went on TV. This is last week. About 10 days ago, she went on TV and said that more kids between 5 and 11 die from COVID than the flu. And that's 100% false. She lied. Based on her own stats on the CDC website, that's false. But you're mandating? You shouldn't mandate. If people want their kids vaccinated, it's up to your parents. You do it if you want your kids. If they have underlying conditions, get vaccinated. It's fine. I'm not anti-vax or craziness on each side, but that should be up to the parents. It should be mandated that your kids, especially since we know for a fact that the kids are mostly immune to this. I mean, it's insane how they're throwing this out there. But I thought the job of the politicians was, hey, listen to your constituents. But it's funny how so many people from the left are trying to destroy this guy's credibility. I mean, it makes sense since he's the same people who want to totally control you and tell you exactly what to do and what you need to do, mandating in America, which is insane. But man, the fact that they're going after this guy, and I see it all the time, makes me realize that, wow, they're really scared of him. They think he's going to be the candidate to run for president next, not Trump. We'll see. But from someone living in Florida, man, this guy got it right. I mean, he saved lives. A lot of people here that have their jobs still. Pretty amazing. The fact that he's saying that he's killing people, come on, Kramer, you got to be better than that. You got to be better than that, man. Come on. Someone who worked under you for so many years and you pounded it in our heads, do the research, do the homework, man. Spend 10 minutes. I understand you can't say shit publicly because you work for somebody. I get it. But come on, man. Don't say anything then. Don't say shit that you don't know about, especially about a state you don't know about or whatever, and killing people. Really? Come on. You got to be better than that. Anyway. But Disney mandating masks again, I would be very surprised if they report a good quarter. It's Q3. I'd be very surprised. Since their parks, they're going to fall way short of estimates. I mean, Broadway, you're not really seeing that crowd. Still mostly closed. Even we wanted to go see Blue Man Group, and they ended Blue Man Group in February. Said, we're not going to do it anymore in Orlando. Which is surprised. So you're seeing that. Streaming, they're like, hey, we're going all into streaming because that was the best thing that happened to their stock price, and said, we got 100 million, 120 million subscribers. Holy cow, even though 80% of those subscribers are free, like me. I have Disney. It's free because I have Verizon. Absolutely free. I don't see them converting these people over to paid subscribers. I'm not paying for it. No way. If they come out with great new content, I will, but I'm just not going to pay for it. My kids aren't really interested in that stuff. A lot of stuff they can see on YouTube and everything else. They don't want to watch, Cinderella and Bambi for the 1,000th time. Some kids do, but eventually you get sick of it, especially with TikTok and everything else and what they're competing with. Now they try to release their movies in theaters and then same time through streaming, kind of like HBO, which resulted in Scarlett Johansson suing Disney since that was not in her contract. And what did Disney do? Of course, they handled it professionally, saying Johansson showed, and I'm quoting, callous disregard for the horrific and prolonged global effects of the global 19 of the COVID-19 pandemic. Are you kidding me? Are you kidding me? Horrific? Disregard for the horrific and prolonged global effects of COVID-19. Horrific, really? And by the government's calculations, look at the stats. The same amount of people have died over the past 12 months and over the past calendar year, in 2020 as previous years. So there's no uptick in deaths in the U.S. Again, nobody likes stats and facts anymore, right? You can say whatever you want. And if Nixon was around today, they could catch him even more than they did with Watergate, and he'd be like, I didn't do it, and he'd still be in office. And that's the way it is right now. You could catch a politician on video doing something, and they're like, nope, I didn't do it, and everybody ignores it. That's the way it is now. That's how crazy it is. But when you look at stats, there's no upticks in death in the U.S. It's because people are not dying from other things, like the flu. Since COVID is kind of a form of the flu. It is. I mean, look how many people get the flu every single year. This year, hardly anybody got the flu. Why? If you look at the numbers, what is it, 32 to 35 million? That same amount of people have COVID and not the flu. You got a shot, a flu shot. Well, it's a COVID shot. It's the vaccine. And we were told once you get that vaccine, you're fine. You'll never need to wear a mask again. That's coming straight from the president. Now you got to wear masks again. And you know what? You need a booster shot. It sounds like the flu, doesn't it? I had COVID. Listen, it's worse than the flu, and it's worse for some people, but when you look at statistics, it's very comparable. But nobody wants to tell you that. They just want to tell you Delta is all over the place, and you got to be careful. Even though Delta is a very mild strain, it's more contagious, but it doesn't kill people. Not as much. Yet everyone's going crazy. Delta, wear masks, close everything. New York, mandating, all indoors. Forget, I don't even want to go to New York anymore. It pains me to say that. Pains me. That's why I grew up for 40 years. I am not going to New York. I'm talking about business or personal. I have no intention on going there. Are you kidding me? It's crazy. But getting back to Disney here, I mean, I don't think it's a good idea to piss off one of the most respected actors on the planet with that line. I mean, apologize and settle it, but really you're throwing COVID out there? That's what you're pissed off about? She's talking about a contract and saying you're not supposed to release streaming. They're like, oh, you're total disregard for COVID? No, you signed a contract. But I could tell you, streaming is all about new content. Netflix continues to blow away the competition. No one's even close. No one's even close to Netflix. No one's even close. And most new content needs great actors and actresses. Most, not all of them, but most of them do. Which is why Netflix, again, is kicking everyone's ass, locking in some of the biggest actors on the planet. But looking at Disney and the stock, I suggest buy it here. Because every time I throw out facts and figures and stuff like that, I mean, it's like AMC. The numbers don't matter. Nobody really cares when it comes to earnings and sales. I have nothing personally against Disney. I hope they kick ass. I really do. I have nothing personal against them. Just think the company's on very shaky ground. Nobody really talks about it. And they're one of the few, if not only, consumer-related companies you'll find, and these are major companies, S&P 500, that you'll find, the whole S&P 500, where earnings have not returned to pre-COVID levels already, and they're not expected to return earnings to pre-COVID levels until 2023. That's a long time, 2023. We're in 2021, 2022. I mean, think about that. That's how much money they're spending on streaming because they're giving it away for free. And they're not generating $1 billion on their Marvel stuff anymore. There's no one going to Broadway. Look at all their channels. And they're going to be fine. They're going to be cool. But should the stock be trading at 30 times forward earnings when you're growing earnings much slower than the rest of the world? And you decide to go all in on streaming, which we know from Netflix is a huge money-losing business for decades for them. Yeah, decades, for a good 12 to 15 years. That's a tough business, charging people. Again, you have pricing power, I guess, but does Disney really have pricing power? It's not that pricing power when you just give 80% of your subscribers are free. They won't tell you that. The 80% are free. And all their ads are coming internationally, which is a much lower average revenue per user. Again, they want to just show 120 million, 150 million, 200 million. That's what they want to show, and eventually you have that, and they're going to be forced, hey, we'll make money off of those emails and those people eventually. But I don't think it's going to be through streaming. And they're the greatest marketing machine in the world. So, they'll probably do it, but it's going to take a while. For me, paying up at 30 times forward earnings for this, are you crazy? I mean, you could buy IBM that's growing much, much faster, has a 4.5% yield, generate $12 billion in cash flow, and more than 50% of their earnings comes from cloud. I mean, it's a cloud company now. And it's trading like 12, 13 times forward earnings? Would you rather own? But hey, Disney's streaming. We're okay. Wait till next quarter. They're going to announce big numbers on streaming. They'll probably give it away for free again. Again, their intentions weren't to give it away for free for Verizon, but they had to because they couldn't see a drop in that number because they know they would have saw a 30% drop in their stock price. It's the only thing holding their stock price up. So they said, hey, we're going to give it to these people for a few months. And then when I called, they said, no, you have it free for life. I said, I have free Disney for life? They said, yes, because you're a Verizon wireless customer with, unlimited data plan. I was like, holy cow. Anyway, that's over 100 million people. So you figure 50, 70 million converted over to Disney? Crazy. But moving on here. When I was at the parks and Universal, they were all jam-packed. Every one of them. We did take a VIP tour, since, again, I saved $5,000 on my flight to Dominican. I wanted to make it up. The VIP tour is unbelievable. And it's a personal tour where you go through, like, the back doors of every ride. They tell you stories and the history about it, which I love storytelling. You never wait in line. You can sit in the front row of any roller coaster. You can also ride as many times as you want. Again, it is expensive. But, man, it was really, really cool. It went on the Velociraptor coaster, that new coaster that they have. It goes 70 miles an hour. I think it's an Islands Adventure. And holy cow. That was the craziest thing I went on. It's the craziest coaster I've ever been on. I've been on a lot of roller coasters. So me and my daughter went on. We had a great time, my oldest daughter. And then when we got down, my wife's like, you know what? I want to go. And she asked me, not my daughter. She's like, could you go with me? I'm a little nervous. She wants me to go. So I'm like, all right, cool. It was great. I'll go. And I went on a second time. Big mistake. Big mistake. And I'm pushing 50 now. I'm almost 50 years old. Almost 50 years old. But I feel younger than ever. I work out a lot. I feel great. My mind tells me I can do anything. My body pretty much disagrees with that assessment. And my stomach hurt for at least the next 2-3 hours. I was like, I felt a little queasy. I mean, going on crazy 70-mile roller coasters with all those twists and turns and going upside down. I don't even know. You lose count because you're going upside down so many times and so fast. But doing it twice at 49, man. Holy cow. It's tough. And I'm getting old. I wish I wasn't, but I am. So anyway, we had a really, really great time. And by the end, our tour guide, who was absolutely awesome, she was great. She said that she keeps track of this, which is a great stat, that we went on probably about almost every single ride that you can go on in something twice. And she calculated how much time it would take to go on all those rides if we did it without the tour, if we waited online. And we saved 14 and a half hours. 14 and a half hours. That's how long some of the lines were, especially for the Harry Potter stuff and, hour and a half waits. You get through all that stuff. But that's how long I waited in lines to go on all the rides that we went on. But honestly, I mean, VIP tours, not for everybody, is expensive. If you could do it once. It'll create memories for life. My kids are talking about it every single day. It really, really is cool, and it's a great experience. But again, it is expensive. But when I say $5,500 on tickets that I had to really impress my family, and we haven't gone on vacation for a while, I was like, all right, let's splurge a little bit and go a little crazy. So the next day we went to Volcano Bay. I'm getting to something very important here, especially stock related. I'm going to give you about 30 ideas in a minute. There's a reason why I'm telling you all this stuff. Volcano Bay, pretty much the greatest water park around. Really, really cool. At least in the United States. And I was trying to get a cabana. And I think they have like 80 cabanas. And they were booked for a week out. So I was hoping someone would cancel. And we finally had an in through our tour guide and said, hey, we're looking to get a cabana. And, they're like $250. And, these things are really, really cool. I mean, it's an enclosed tent. They have a refrigerator. They have a fan overhead. They have locker. They have towels. You can order food since you have, personal service and stuff. And really, really cool. So my tour guide knew someone in operations in the operational department in Volcano Bay. They called and said, hey, could you help them out? And we finally got through. When I asked how much the cabana was, again, it was $250 6 months ago. $850 for the cabana. And that doesn't include the tickets to get into the park. Or if you want to get Fast Pass or whatever. It doesn't include any of that. $850. And they were sold out. You couldn't get one. People were lined up to pay that price to get a cabana. I mean, that's more than double that you would pay for the tickets just to get into the park. Again, which they're not included if you get a cabana. That's on top of it. But the good news is there's no inflation. The CPI went up 5 point whatever percent, more than 5% last month. But core inflation, there's food energy because people don't eat or drive cars or, use the air conditioner or heat the homes or whatever. We never do that in America. We never, ever do that. That came in line with expectations. The economists were happy. Hey, we're okay. CPI 5%. Are you fucking kidding me? You're okay? It was supposed to be less than 2%. It's 5%, but it's transitory. Our favorite word. You got nothing to worry about. It's transitory. It's so great. Transitory. I love that word. It's the greatest word ever. Allows the Fed to basically say, hey, we don't care where inflation goes, and we're going to keep rates low forever, which is good for stocks. Especially when you're throwing around, how do we get to a $3.5 trillion infrastructure bill? Could someone tell me that? I mean, looking 5 years ago when Trump ran, maybe a little longer than that, but Trump ran against Hillary, both of them, right? Both sides. They campaigned on a $1 trillion infrastructure package, which was a lot of money back then. That was only like 5 years ago. How do we get to $3.5 freaking trillion? Like nothing. Like nobody's even, hey, it's our $3.5 trillion. You see some of the shit that's in this bill? It's insane. It's insane. How do we get to $3.5 trillion and nobody's even questioning that? I thought $1 trillion was crazy. $3.5 trillion. Anyway, that's not going to result in more inflation. Absolutely not. No way. It's transitory. Which, by the way, if you look up the definition, is brief. But brief, according to the Fed, it's 24 months. That's brief. But it's transitory. You're going to be okay. Don't worry about it. Pay your $8.50 for your cabana. You'll be fine. Now, the hotel we stayed at, booked to the point where we were checking out Saturday morning, and the checkout time is 10, which is pretty early. It's usually 11 in most hotels, but sometimes it's 10. It was 9:45, and a lady was knocking on the door, saying, you got to check out by 10. She was waiting outside our door to make sure we checked out. That's how busy they were. They said, we need you to get out. They're like kicking us out. And you look at the hotels, fees galore, everything. Doesn't matter if you have a car, doesn't matter whatever. You're paying parking, you're paying this, you're paying that. Oh, resort fee for this. Probably they're up to about $50, $60 a day. If you're staying for 6, 7 days or 5 days, I mean, it's a lot of money for the average family. And look, if you're going on vacation anytime soon, just expect to spend an extra 25 to 50%. I mean, food prices were jacked up everywhere we went. Everywhere. Hotel fees jacked up, merchandise jacked up. I'm not sure how families can afford a 7-day trip to Disney. I mean, that's, what, 7 to 10 grand at least, including flights, the park fees, you know how much it is? You can buy a 4-day park pass and stuff, fine, whatever that is, $250. Say if you have 3 kids, it's 5 people. I mean, it's insane. You look at food, you're looking at rooms. I thank God Florida and, Disney's in driving distance for us, about 2.5 hours away. I can tell you, every single restaurant was jammed. You couldn't get into an IHOP or Denny's for breakfast. There was 60 to 90-minute waits. We called Pizzeria Uno at 8 o'clock to see what time they're open. They said they're open until 10, and we would drive in there. And as we drive in there, I said, okay, let's call around 9 o'clock to order food, and we'll just pick it up and go to the hotel. They answered, and they said, we're no longer taking orders. We're too busy. At 9 o'clock. I said, you just told us you close at 10. We can't. We don't have the staff. We can't. I've been going to Disney, like I said earlier, for 10 years. Longer than that, but living in Florida for 10 years, so probably 2 to 3 times a year, since, again, it's 2.5 hours away. It's not that far. In terms of prices, I've never, ever seen anything like this. Never more expensive. More importantly, people had no problem paying these higher prices. Think about that for a minute. If you ordered food and they said, well, there's a $10 surcharge, and you said, whatever, for what? Well, it's just $10 surcharge. Don't make it up. And most people are going to be like, okay, just pay it. You know why? Because if you don't pay it, you have to eat someplace else. And that's going to take at least another 60 minutes from the time you leave there, especially for dinner. Unless you want to go maybe to Dunkin' Donuts or something. Maybe. Then you probably have to wait 15 minutes. Where they have 1 or 2 people working there because nobody can get help. I've never seen it like this before. Wait till it opens up internationally, how crowd's going to be. Then hopefully it'll be very, very good for Disney once they get rid of masks. I think people are really getting sick of the masks, of course. We were told, hey, imagine you got vaccinated and you have to wear a mask. I mean, that would really piss me off right now. Really piss me off. Anyway. So I'm taking you through this whole story and personal story, and hopefully I didn't bore you. But why I'm doing this is because you could learn a lot from going on vacation. Especially when it comes to investments and investment opportunities. I look at the places you're going to. Are they crowded? What hotels are doing well? Are people buying a lot of stuff? Not just the crowds. Are they holding lots of bags? What are they buying? Are there long lines at these stores, at restaurants? Is everything more expensive compared to your last vacation? And that's just looking at the macro view. Everybody says macro and they get bored. That's looking at the macro view. But you can learn a lot from that. And that's like a top-down approach. And bottoms-up is like looking for individual ideas and stuff like that, but even looking for stock ideas. And when you're going on vacation or you're going away, for me, again, I'm spending time with my family and stuff. I'm not, taking time away, but these are things that I'm noticing. And by noticing some of this stuff, it leads to lots of investment insights and opportunities. You're looking at Universal, it's Comcast, right? You look at Disney, how they're doing. You're looking at the hotels, Marriott, Hilton, Chipotle, Buffalo Wild Wings, his food place, how they doing? Delta, American Airlines, whoever you fly with. But even, whoever you fly, are the airports crowded? Are they jammed? How much are you paying for parking there? I mean, parking's been jacked up tremendously at all these places. Even when we parked at Volcano Bay, I think it was like, what was it, $25, $26 or something to park at Volcano Bay? Holy cow. Imagine getting a cabana and then tickets. It's what, $1,500 right off the bat without ordering food? And you don't get the food for free with the cabana. Holy shit. Just to jump in a couple pools and go down a couple slides. But people are paying it. They're paying it. But how much did you pay for those airline tickets? And you can go even further where, you're seeing strong demand and packed flights. What does that mean? It means that airlines are going to have to increase their fleet. They're going to have to buy more planes. That's Boeing. And if that happens, there's hundreds of companies that supply Boeing. So a lot of these, when I visit, again, go to that Everett, Washington plant. It'll be an amazing experience. The whole assembly line for airplanes, one of the biggest buildings, if not, I think it's the biggest plant in the world. It's huge. You got like a fire department in there, and you can't imagine how big it is. You can look at it online. It's amazing. It's absolutely amazing. I mean, you could lose your kid for like 2 weeks in there. That's how big it is. It's unbelievable. And you just see all the parts makers, how they make the planes. But look at all the supplies of Boeing. And you got Honeywell, GE, Spirit Aerosystems. You got Eaton, Crane, Raytheon, AK Steel. Ducommun is one that very few people heard of. We did very well with that in a pick in our CVO newsletter a while ago. Gentex, B Aerospace. I mean, you can keep going and going and going. But that's how I look at investing. That's how I find opportunities. Again, of course, I'm enjoying my family on vacation and it's cool, but just noticing, that's the way I think now. That's just how I'm programmed. I analyze everything. But for me, I'm always, always, always looking for opportunities. And the best way to find new ideas and find them quicker than anybody else is by just opening up your eyes and noticing them, because that's real-time data. That's real-time data. I mean, now we're looking at jobs reports, consumer prices, GDP figures. All that's lagging data. A lot of that shit gets revised 2 to 3 times over the next 3 months, next 2 months. That's lagging data. We know inflation was over 5% easily, and CPI was going to be, through the roof. And economists are saying, well, the core was, perfectly in line, up, 0.3%, whatever it was. But you know it, you see it because you're paying for all this shit, right? So you see it before everybody else. But the trends that I brought you, going to Consumer Electronics Show, speaking not just to the CEOs, because every CEO is going to tell you how great their company is, right? They're not going to talk bad about their company, which is normal. But you're talking to the employees, you're talking to these people at booths, you're talking to everyone about different trends. That's how you find the best ideas, and you find them early. Because once you find them, then you start digging, and then you go to Google, and you start just reading a bunch of stories, and then you can talk to different people. And believe me, it's not that hard to talk to people. People love talking about themselves, talking about their job. Call them. I mean, for me, with this podcast, I get to interview them, but just that's how you find new ideas, by going away and looking at what's working. And I can tell you, going on this trip, holy cow, I've never seen it so crowded in terms of restaurants, and we're not even seeing international travel yet. I don't know how crowded the Disney parks were. I know that a lot of people had, instead of going to Disney, and the Disney parks went to Universal because they just don't want to wear masks, and I get that 90-degree weather. But Universal was packed, Volcano Bay was packed, the restaurants were packed, and everybody was paying for VIP services to get extra things. They're all carrying bags. They're all buying stuff. And people have a lot of money, and they're spending it, which is going to be very, very good for profits, which we're seeing right now. I mean, earnings are absolutely through the roof. I mean, I taped this on our YouTube channel, and I'll bring something up right now because FactSet, I tell you, this is the best report ever, the FactSet report. So you look at the FactSet report, it's for free. Just go FactSet earnings PDF and Google, and it comes up. And this one's like a few days old. But they say 87% of S&P 500 earnings have reported, 87% of 500 companies have reported positive earnings per share surprise. That's the highest that have ever been tracked, right? So they're blowing out the estimates. Okay, this isn't because of COVID where it has an easy comparison. This is because the analysts, their estimates are too conservative. And they're probably going to be too conservative next quarter as well because we're seeing earnings go through the roof. The S&P 500 is trading at 21 times forward earnings. Is that expensive? Absolutely not. We know interest rates are going to stay low, right? It's a political organization, no matter what side you're on. It's not independent, so they're not going to raise rates going into midterm elections. No way. Are you crazy? No way. No way is that going to happen. That's why they're using the word transitory. So we have low interest rates. We got another $3.5 trillion coming in infrastructure. People have more money than ever. Sure, we're talking about record debt. Well, talk about record household wealth. Talk about both sides. But man, you see it. You see people, you see your neighbors buying new cars. They're probably, building extension on their houses. People have a lot of money right now because it's been given away. And anyone who owns assets, those assets have inflated in prices because, inflation's through the roof. You could buy a used car now and make, not a used car, but even a new car and make money off of it. You just lose what, like 15% of its value when you drove out? Hold for a couple of months. You'll probably get more than what you paid. It's insane. Look at home prices. Continue to go higher and higher and higher. And more importantly, which I'm showing here, look at earnings. And we look at earnings here, we're going to see about $210 in earnings for this year, for 2021. But with that in perspective, pre-COVID, which are record earnings, it was at 180. So we're 15% high. Went from 180 to about 140 during COVID. Everybody cut back, and we saw that, and it was crazy. So now we have earnings that are 15% higher, all-time record. We have home prices at record highs. We have household wealth, right? More people are rich than ever, record highs. Again, these earnings are showing GDP has bounced back. Everything has bounced back, everything. Yet the Fed won't take its foot off the pedal, which is fucking crazy. It's crazy. We're back. Our economy's back. Our earnings are going to be blowing out estimates right now. You see it from all these companies, at least from most of them. 87% reported positive surprises. But 21 times forward earnings, that's not expensive when you have zero interest rates and you're flooding the money with cash. No way. It's a perfect environment for stocks. That's the way it is right now. But I like sharing that data with you. But a lot of names I threw at you, but this is how you want to look at when you buy stocks and you do different things and you're going on trips. This is what you want to pay attention to. Finding out that data, that real-time stuff before anybody else, and just ask a lot of questions of people. You would ask me. I can't tell you how many people. FrankCurzioResearch.com. Frank, I saw this. Do you think this is a trend? Do you think that? And sometimes that turns out to be really, really big. I'm like, holy shit, really? Is that true? And then I'll start digging and find out, different stories and everything on it and say, holy shit, this thing's for real. Again, we have this massive, massive network, guys. Use it. There's a free podcast. Use it. Send me emails, FrankCurzioResearch.com. Now, I have some big news for you. Really big news. I guess it's big news. So in the weeks ahead, we're going to change the format of Wall Street Unplugged. I'm not going to do it anymore. I'm kidding. I'm here forever. I like this podcast. I like doing it. But right now, we've been taping anywhere from 90 minutes, a little bit over that, with an interview, which publishes every Wednesday, and Dan and I break down the markets and stuff like that. And you're looking at 90 minutes, and we realize, even based on our numbers and the feedback, 90 minutes is a very, very long time for our audience to listen to a podcast. Right? We get lots of downloads, and it's awesome, and I appreciate it. It's great, but we're also seeing that, the staying power is difficult because, it works for Joe Rogan with 2.5-hour podcasts because, when you talk about mushrooms and MMA, you're going to keep someone's attention a lot longer. And I love Joe Rogan. He's great. And plus, you have celebrity guests and stuff. Really cool, crazy guests. But for finance, it's a tough ask. So in a few weeks, we're going to change the format and changing Wall Street Unplugged from one day, Wednesday, 90-minute podcasts, to 3 separate days, a 30-minute podcast each. One of the segments is going to be the interview only. Probably publish that on Wednesday. Another is going to be with Dan and myself breaking down top stories, giving the investment ideas. And the other will include a monologue, kind of like today's format. It's a monologue, and followed by a Q&A, where I would take your questions. You can email me at frankcurzioresearch.com. Those questions can't be about any current holdings in the newsletters, since that's reserved for Frankly Speaking, which is only available, and that comes out Friday to paid subscribers. Any paid subscriber of any of our products, Curzio Research, gets Frankly Speaking for free. But this new format, also, when it comes to answering those questions, we're going to have maybe Luke answering those questions, which he doesn't know about yet. I didn't discuss it with him, but I'm sure he's going to be open to it because he loves that stuff and loves video and stuff like that, and as well as Genia. And I think that's going to provide tons of added value for you. And that's how we always look at this business. How can we provide more value? Because 90 minutes is a little long. So we're going to be separating some things. Today, there's no guests. I don't have a guest. I don't even have Daniel here. So it's all me. Sorry, it's all me. And if you're watching this video, sorry you have to watch my face the whole time. That's okay. But Daniel is on vacation, seeing his family in Ohio. He's coming back next week. But if you're interested in learning more about this or interested in signing up, you can sign up go to www.wallstreetunpluggedpodcast.com. And what that sign up is only going to do is we're going to let you know when the podcast is published. With a couple of headlines and let you know what it's about. So, we're going to probably have a format like this where I'm going to get to some questions in a minute. And then that will be one segment, maybe on Tuesday. Wednesday's going to be the interview. And Thursday, Daniel and I will be breaking down top stories and stuff and having fun and maybe also answer a couple questions there. But we just want to make it more interactive. I get a lot of questions, especially for Frankly Speaking. And I used to do that podcast for under the Wall Street Unplugged brand, but, we separated it. But just answering a lot of those questions is pretty cool, and we know that you really like that. We always get great emails when we take people's questions and we answer them, like, Frank, you heard us on the radio, whatever, and, it's pretty cool, and a lot of those questions other people are asking as well. So feel free to send in those questions, and I would say this has happened in a few weeks. We're very early, just want to bring it up to you, but that's the format. But let me know what you think. Because we do have a longer podcast. A lot of people do listen. We do get tons of downloads, but just, that length is we're realizing is a little bit long, and we're listening to our customers, and we want to provide more value for you, right? That's what we do here at Curzio Research. We think about our customers first, and that's going to be the new format. So again, there's no guest today, no Daniel visiting his family in Ohio. So yeah, you're stuck with me. And for DSC subscribers for this podcast, we usually take a pick from every guest. Well, you're going to get a pick from me. And it's a trading opportunity. So pay close attention. That is a newsletter where we charge, I think, $4 a month for. Most people that subscribe usually pay the $4 fee forever because you get a ton of value. You're getting the best picks from experts that I interview. We write a one-page report, and we provide a portfolio, buy up to price. But for today, you're getting my trade. Using my newsletters, recommend things with a time period of 6 to 18 months, maybe 24 months, sometimes a little long-term in Curzio Research Advisory, which, by the way, your Curzio Research Advisory, the newsletter is coming out today, and you're getting 3 new picks. I usually do 1 pick a month. You're getting 3 new ones. That should be pretty cool. So, video happens to be a little bit longer than expected because I'm analyzing 3 companies, 3 great companies that I want you to hold for a few years that I think easily more than double your money on. And you'll see why, where I provide all statistics, all analysis on it. So, for DSC subscribers, pay attention because it's a trading opportunity. This is going to be a trade. Something I'm very excited about, a name that I never, ever, almost never mention, at least for the last 3 years. But it's a name that's breaking out right now that I really, really like, and there's a lot of reasons for it. So, at least DSC subscribers, you have something to look forward to. Now, let's take a couple of questions in this new format, and the first one's from Michael. And this isn't really a question. He's just, he has some really cool comments. He goes, good morning. I want to really thank you for giving me extended access to the membership. I'm grateful for the offer as we transition to building a family. What your company has done for me has been astonishing. You've helped me be more logical with my investing, and have propelled me forward with building wealth for me and my family. Thank you for what you do. Looking forward to being a member for the years to come. Look, Michael, we have some negative emails too, of course, and I actually like reading negative emails more than the positive ones. But for something like this, this is what it's all about. This is why I do this. To make you a better investor doesn't mean you have to agree with my opinions all the time. You're not going to, even when it comes to stocks, even when it comes to, sometimes politics or whatever. But the one certainty is I'm always going to put you first. Okay, when I'm not making you money, I am freaking pissed off. Okay, and the day that I can't do that anymore, or I won't do this job. For right now, we're doing well. We're doing well across the portfolios. I love to see people making money. I love to see the trips that you guys go on, all that stuff. Again, that's everything to me. That's really special. So thank you so much, Michael. I appreciate it. And thank you for being a subscriber. It's from Faris. Faris says, he goes, hey, Frank. You're recommending gold recently in Curzio Research Advisory. What does a recent gold stock action tell you? Are you rethinking your thesis? Is inflation transitory? Is gold as a monetary metal dead? Has it been replaced with Bitcoin? Ciao. So that's Faris. My thesis hasn't changed on gold. And you know why? Because one is I don't have like a massive position. I mean, I'd say like 10, 12% of my money, maybe 15% is in gold stocks. And a lot of those stocks I'm up on because I've gotten to really great private placements years ago, and I still own shares. They're down from their highs like everybody else. But if you're 100% invested in gold, I'd be worried. If you're 100% invested in gold, I'd be worried. And I say that because of Vancouver and a lot of my friends, they're all in. Gold, mining, silver. There's a whole world out there with the S&P 500 and Dow, they're hitting new highs every single week. There's a lot of great names, new names coming out, just new deals coming out. You have access to. You shouldn't limit yourself to any sector, any investment, anything. Ever. Learn about. If you don't know, Peter Lynch says, well, we want to invest in what you know about. Well, you can know about anything. It's easy to learn about industries through Google, through anything for free. You can learn what cloud computing is. You can learn what hybrid cloud is. You can know the difference between those two, the companies. You could probably do that within an hour. Within an hour. Just shut everything off, lock yourself in a room, and just start reading. It's not hard. Ask lots of questions. Got sources like me where you can ask questions. But yeah, gold had the flash crash, and you'll be worried because the conditions have never been more favorable for gold as right now. If you look at supply demand, it's amazing, right? There hasn't been a lot of huge finds, and they cut back on CapEx tremendously during like 5, 6, 7 years ago when gold was terrible and these big companies were highly leveraged. So there's huge demand for gold right now, especially from the majors, which is going to lead to more and more acquisitions of junior miners. You have the inflation thesis, but has it been replaced with Bitcoin? I don't think it's replaced, but I think Bitcoin has taken that luster away. Because one of the best things when it comes to gold is when you hit that cycle, and you're right, those names go up. They don't, not just by 100%, and we've seen that right recently, by about 2 years ago, finally coming off their bottoms, maybe 3 years ago, coming off those bottoms at that 5-6 year lull. From 2012 to 2018, probably. But you're seeing gold surge where those gains are 3x, 5x, 7x. And those are huge gains when the cycle turns. And that was provided a lot of excitement for investors. But Bitcoin, if you look at our newsletter in Bitcoin, which we started in 2018, I think. Might have been 17. Some of those gains I've never seen in the stock market before. And I've been doing this for 30 years. And we had something that was up 40x at one point. We have a ton of names up, 10x, 12x, 15x in that portfolio. And this is even after the pullback. So when you have that, you're taking that speculative nature from junior miners away and going into Bitcoin and other alternative tokens, or, they're also called shit coins. But, we don't have any shit coins. We have good names in our newsletter, but even stock picks around crypto and stuff like that. But is it taken away a little bit? But I wouldn't say it's dead. I don't think it's dead. I think you're going to see great names with good management teams that have great projects, high-grade gold. They're going to be bought because the balance sheets of the majors have never been stronger in the history of ever since they were formed. And the balance sheets are incredible. They're making a fortune. They can produce gold for under 1,000, and look where it is, even at 1,600, 1,700. Huge, huge margins, huge cash flow. A lot of these big guys are paying dividends now. Holy cow. Balance sheet flush with cash. Record margins, and they're trading at dirt cheap valuations, the majors. So definitely keep your allocation there. But the reason why I'm not worried or crazy is because, I don't have all of my money in gold, which I guarantee you some people listening to this right now do. I know people have all their money in uranium. It's crazy. It's crazy. Do I have money? Yes, I have big positions in uranium. But it's not 100% my portfolio. You got to be nuts. You could say supply, demand, and balance is definitely going to happen. Yeah, we saw a lot of these stocks move up, and now they've come down. But for me, the big tell is, why are electricity companies who are in dire need of uranium, why are they not locking in prices at 30, 32, 33? Why? What are they waiting for? I would think it's going to go to 50, 60, 70 uranium prices. But, you really want to see that. Those are the smartest people in the room, right? Those are the guys who have to buy uranium in order to run their plants. So it doesn't mean uranium can't go higher, the stocks can't go higher. Even though a lot of those uranium so-called, they're not producers, will never produce uranium probably for another 25 years, and prices have to stay over 100 probably for a good 5-year period. But who cares? Uranium prices go higher, these things will go higher. But don't be 100%, all in on one sector, guys. That's crazy. That's really crazy. And that's why I'm not worried about gold, because other things are doing well. And yes, gold might come back, and it had a little bit of a flash crash, came back a little bit. But I still think gold goes past 2,000. The conditions are ripe, and you'll see that. We're going to have low interest rates forever, negative real interest rates forever, and that makes gold a very good option, as well as Bitcoin. Guys, you're allowed to own both. I own both. You can own both. get off Twitter, because the people at Bitcoin hate gold, gold hates Bitcoin. Get off of Twitter. You can own them both. Own them both. They're both good options in a world where the government, $3.5 trillion is fucking coming out. These guys are nuts. You think that's the end of it? $3.5 trillion? You think that's the end of it? No way. More trillions and trillions are coming. That's the new world. That's got to be great for gold. Last question here, and this is from John. It goes, Frank, I'm a chartered member of Curzio's newsletters. I've been a Curzio One member for over a year now, happily owning several private placements. Thank you very much. Just thanks for all you do. Be glad you're in Florida. They're trying to force my grandchildren to have the vaccine, even though they have had COVID. He goes on a little bit more. I don't want to mention too much here, but he's talking about the research. I will say that he is in this industry, very, very big in this industry. So it pisses him off more than anything, but I won't get to that point of it because I want to keep that, just in case. But John goes on, he says, I asked this question once before and never got an answer. Here's a story. I bought Walgreens years ago, WAL. I think that's Walgreens, right? What's WAL? I have to look at that now. Hold on, CNBC. Go here. But he says he bought WAL, because I don't remember it being that low, was it? Oh, okay, Western Alliance Bancorp. Wow, Western Alliance Bancorp. What did I think that was? Okay, Western Alliance Bancorp. WAL is a symbol, and I never heard of this name. But he goes, he bought it years ago for an average of $6.25 a share. That's how I knew it wasn't Walgreens. Sorry. A few years ago, it started paying $1 dividend and a 16% return. The stock was over 100 in May. And by the way, it's over 100 right now too. So I finally sold some, but then wonder if that is such a good idea, giving up such a great return. I'm sure this sounds like a silly dilemma. How do you manage this? Is there a point where you'd rather have the capital gain, especially with the talk of making the gain ordinary income? I know there is no hard and fast rule, but would like your thoughts. John, that's a pretty good problem to have. I can tell you that. But his stock is $6.50. Yeah, this Western Alliance Bancorp, good for you. I don't want to give tax advice. But I can tell you paying taxes is a good thing. It means you made money. And I've made the mistake where if I had a stock that was up a lot over 8 months or 9 months and I waited 12 months, a lot of times I'd seen that stock go down and it would have been better for me to sell it. And if you're close to that period, it's different. But, with the new tax structure, we haven't, from what my understanding is from the infrastructure package, is that the Republicans bought into this because it pushed off those, higher capital gains tax and higher taxes that were expected. Okay, that's what we're seeing. Again, it still has to go through the House, and who knows if it passes, it could have trouble. But as of right now. So if we do see those capital gains tax get extended from whatever, 20 to 31%, whatever they get extended to, it might be a good idea if you're looking to sell. But again, it is a good dilemma to have. You're right. It is, you say it sounds like a silly dilemma, but listen, I wouldn't even focus on that. I think you have to focus on the stock. If it still fits your thesis, if you still like it, continue to hold it, or at least sell off a portion of your position where you could hold this and you're not even worried if it goes down 30% anymore. So maybe you sell, say if you have $100,000 in the stock now, or $50,000 in the stock, whatever. Let's use a round numbers, $100,000. If you sell like $75,000, that's what I did with one of my positions in Hive Technologies, Hive Blockchain. I got out of it and made, great money on a private placement that I was in. And then I think I sold off 80% of it. And I'm pretty sure I got like $3.25, $3.50 was $6, but I was under the lockup and I couldn't sell it quick enough. And I was in very, very, very early at a very good price. So I made a lot of money on it, and I kept 20% of that. And that thing fell to like the pennies. And now it's back up, went up tremendously. But I didn't really care because I made my money on the stock already. Because a lot of it has to do with your mind, John, psychology and how you feel. So if you're selling off a portion of this, I don't know how you would do it for tax reasons, tax purposes. Again, that's up to you. For me, I really don't make an investment decision in terms of, selling my stocks or buying stocks or things like that, looking at taxes all the time, unless it's very close to, again, it's a big difference between, short-term capital gains and long-term capital gains. So if I'm like 10, 11 months, I might make another month or two to sell something, but not to the point where, for me, it's about the thesis. If you think this thing can go to 150, 120, 130, continue to hold it. If not, then you could sell your position. Remember, Western Alliance doesn't give a shit about you, John. They don't care about you. The stock doesn't care about you. Okay, so I know you have personal ties to it. You made a fortune on it, but if you're thinking of selling, which is your choice, I would sell a portion of it, and I think that solves the problem and your question. Yeah. hopefully that answers your question. But John, great job on that. WAL, man, Western Alliance Bank Corp. Awesome. So guys, that's kind of going to be the new format for one of the podcasts. Let me know what you think. And then we're going to do the interview by itself, a really, really cool interview. That's going to be every Wednesday. We're not going to do this until a few weeks. It might take more than a month because there's a lot of logistical concerns. There's a lot of downloading, uploading, all this stuff. So this is the format, but I want to hear from you because we always want to do what's in our customers' best interests. So feel free to email at frankcurzioresearch.com. And once this does happen and we start separating the podcast, we're going to be emailing that out. If you want to get on that list, this way you get notified every time the podcast comes out. A lot of people know that. Just go to wsupodcast.com and you can go to that website and sign up. Again, it's not about sending thousands of emails. It's just letting you know when the podcast is because we get that question sometimes. And since we do it only once a day, it's not that bad, but even for Frankly Speaking. But you'll know every podcast. Not only that, it's going to come to you with, the headline, what the podcast is about and some show notes and stuff like that. So it might not interest you or it might interest you, something you want to listen to, but that's how you get all that stuff. And so we can email that to you. So feel free to sign up for that and let me know. Love to hear feedback. frankcurzioresearch.com. Woo! Whole podcast by myself today. By myself. Man, I am tired. I'm very, very tired. Anyway, thank you so much for listening. I appreciate all your support. If you're a Curzio equity owners holder, we're doing lots of stuff to increase liquidity. I've been working my ass off behind the scenes. The security token industry is really starting to take off right now. We're right in the middle of this massive, massive trend. Very exciting stuff. So, that's a way to get equity in our company, participate just like, you would in a stock. We're going to have a board of directors. We're going to have voting shares and stuff like that. We're going to do everything by the book and make this almost exactly like a stock because that's where I see this industry going. And when it does, it's going to open up doors, so many opportunities to so many people and getting in the ground floor of businesses that are growing, right? That's the point. Not buying Robinhood at a $40 billion valuation, although it did have a nice run up. And believe me, I'm happy about that. I went off on Robinhood. I went off because I think they're killing, just individual investors, the retail investors. It's nice to see that Wall Street Unplugged crowd got behind it, really pushed it higher like they do with MEMC and stuff like that because Wall Street's really making a killing here. Anyway, I want to say thank you so much for listening. Lots of great news coming down the pipeline. And I was going to say I'll see you in 7 days. Actually going to have to change that since Wall Street Unplugged won't be every 7 days when we change the format. I don't know. I think about something else. Something else to say. We'll see. Anyway, for now, I'll see you guys in 7 days. Take care.